Okay, for this bank reconciliation, there's some information in the paragraph that you will use to complete this type of a bank reconciliation. So it says the cash account reported a balance of $25.50. So that would be on the book side. That has nothing to do with the bank side. There were outstanding checks totaling $700. These are checks that have not hit the bank yet. So this will affect, we will have to adjust the bank balance for that amount. And then we have a deposit that in transit that has not hit the bank yet. So this will be adjusted on the bank reconciliation. The bank statement listed the balance for $34.20. So the bank balance right now is $34.20. And we have deposits in transit of $400, which is given to you in the paragraph. So that would be $38.20 less your outstanding checks, which were $700. So if you subtract $38.20 minus $700, you would get $31.20. And then for the book side, we have a book balance that tells us above of $25.50. And it says that the banks collected $580 on account from a customer of ours. So we need to add the bank collection of $580. And then there's some interest revenue that we made off of our balance in our bank. Some interest, $20. So our total amount to add to our cash balance that is on the bank side would be $31.50 less. We have a service charge of $30. So we would subtract that, and that would give us $31.20. Now, for your journal entries, when you establish a petty cash fund for $200, you're going to debit petty cash and you're going to credit cash. You're taking cash out and putting it into petty cash. So this is going to be to open the petty cash fund. Then on the 31st, the petty cash fund has $19 in cash and $193 in petty cash tickets that were issued for office supplies. So we need to record that we purchased some office supplies, and we need to record an entertainment expense of $170. And then we need to credit cash for the amount that we need to put in there. So if there's $19 in cash in the drawer, then we need to put $181 back in. So if you add your debits up, your debits are more than your credits, so you would have cash short and over of $12. So this would be to replenish the petty cash fund. Then to increase the petty cash fund, you're going to debit petty cash for $100. And the only time you're going to do debit or do anything with petty cash is if you are establishing the fund or increasing or decreasing the balance. That's the only time petty cash would be affected as far as journal entries. On question 3, we want to create the fund, so it's for $420. So this is very similar to the one we just worked. So we're going to open the petty cash fund. Then the next one, we need to record the petty cash fund replenishment. So what we spent was on a delivery expense of $10, a postage expense of $20, a printing expense of $45, a miscellaneous expense of $60, and a office supplies expense, or office supplies. We purchased office supplies, so it's 80. We haven't used them yet. And then we want to credit cash for the amount we need to make the fund back to 420. So if we let's see, it says the cash is 186. So if we need 420 in there, and we only have 186 in the drawer. So 420 minus 186 would be 234. So we want to credit cash for 234. But if you add these up, 140, 185, 205, 215, if we add all the debits up, we would have a cash short and over on the debit side. So basically a cash short is what we have. So this would be to replenish. And then assume we decide to decrease the petty cash fund. So we're going to decrease the fund. So we're taking cash out of the petty cash fund. So we're going to put cash back into our cash account, and we're going to reduce the petty cash fund. So we have reduced the petty cash fund by $100. So you credit it, and this is to decrease the petty cash fund. As far as question number 4, maintaining the petty cash account at its designated balance is the nature of an imprest system. The imprest system requires that at any point in time, the petty cash box contains cash and petty cash tickets that total the amount of the imprest balance. Remember, your cash plus your ticket should equal the balance. This clearly identifies the amount of cash for which the custodian is responsible. That's just some vocab terminology type things. Then on the next one, this is another petty cash fund. Well, it's the requirement 2 here. Begin by journalizing the establishment of the petty cash fund for $200, which is given in the paragraph. So credit cash for $200. And then this is to open the petty cash fund. And then now journalize the replenishment of the fund on March 31st. So it looks like we had office supplies of $157, and we had delivery expense of $35. And then, is that it? So we need to credit cash for 181, the difference between what should be in there and what's actually in there. And the debits equal 192, so we are over by 11. So, and this is to replenish. And then, what is the balance in the petty cash? This is actually on your midterm. The balance at the beginning was $200. Post the applicable entry to the petty cash T account, and then the balance at the end is $200. The balance of petty cash is always the amount that you opened it for. The petty cash balance at all times, unless you increase it or decrease it, is going to stay the same. For question number 5, I'll try to see if I can cover it without the time. Let me check and see which one. I may have to do a separate video. I will try my best to do this one. First, we're going to start with the bank balance. And the bank balance, that's the checkbooks. so that's not what I need. The bank balance is $313, and then we had, let's look at our deposits here. It says we had a deposit of $520 and $105, and if we look over here, it looks like, no, we had one deposit of $105. The $1210 is not on the bank statement, so that would be a deposit in transit for $1210. So that would be $1523. And then we want to subtract any outstanding checks. We have the check for $40, check 622, 623, 624, and 625, but 626 and 627 have not come through yet. So we have check 626 and check 627. 626 is $100 and 627 is $255. So the total deductions there are $355. So our adjusted bank balance would be $1523 minus $355, which is $1168. I'm in a hurry, so hopefully that's right. Then the book side, we're going to do the balance on the books, which if on this particular one it shows the balance, so it's $1245. So then we need to add any collections that the bank may have made, and it doesn't look like the bank did anything special for us, so we're going to leave that blank, and hopefully that is right. And then we're going to do the correction of the book error. I think I saw a book error, 620. It should have been for 130. And we have the bill for 80 on the book. So we have a correction of an error of $50. And then we have a printed check charge of $5, correction $22, and we have a service charge of $5, so that would be $77. So the adjusted book balance should be $1168 if everything is correct. How much does O'Hara actually have on November 30th? $1168, the balance. And then it's going to ask you to correct the error. The error was on the utilities, so it was a $50 error. So we would correct that by debiting utilities expense and crediting cash for $50 more. And then the printed check charge would be a bank expense and cash for the $22, and your description would be to record printed check charge. And then the last one is going to be for the service charge. It's still a bank expense, but we're going to do these separately, and the description would be to record the bank service charge. And I barely had enough time to do those. So my video that I will post tomorrow will be on question number 6.